We're now going to start talking about depreciation recapture. And recapture just means we're going to reclassify or recharacterize the gain we have or we recognize on the sale of certain assets. So here's the situation. The purpose of recapture or recharacterization is that the government doesn't want an individual to receive preferred tax treatment on a gain that was generated only because they took depreciation deductions. So let me give you an example. If we purchase an asset for $100,000 and we sell it today for $100,000, sold for $100,000. And let's say we took depreciation of $60,000. So our book value or our basis is $40,000. You would have a gain generated from selling it for $100,000 and having the value be $40,000 on your books. You'd have a $60,000 gain. And what the tax law says is, how should we tax this gain? Should you get preferred tax treatment on that gain? Or because the gain was totally generated because you depreciated the asset, should you have that gain taxed at ordinary rates? This would be different than if we purchased the asset and then sold it for $120,000. If we sell it for $120,000, then you'd have a gain of $80,000. Some would have been generated due to the depreciation deduction, some of that gain, but some of it was due to the fact that the asset appreciated in value. And so the tax law views these things differently. The government only wants you to have preferential tax treatment when the gain was generated by an appreciation in value. When your gain was generated because you depreciated the asset, remember what happens when you depreciate the asset. You're taking the depreciation as an ordinary deduction offsetting your business income. And so you got an ordinary deduction for the depreciation, you're not going to get a preferential tax rate on the gain. And so recapture is when we say, let's look at that gain and see if we need to reclassify any of it as ordinary so that it's taxed at higher rates. All right, so our depreciation recapture applies to depreciable Section 1231 assets that generate a gain. So we talked about what 1231 assets are previously. So we have ordinary assets, capital assets, and 1231 assets. Remember, 1231 assets are assets used in a trade or business with a holding period of more than 1 year. So those are the only assets that are subject to the depreciation recapture. Depreciable Section 1231 assets that generate a gain. So make a note, that losses don't get recaptured. We don't have this issue with losses. All right, I also want you to highlight that depreciation recapture changes the character of all or a portion of the gain, but it does not change the amount of the gain. So it changes only the character. And remember, when we change the character, we are changing the tax treatment. But it does not change the amount of the gain. So the amount of the gain stays the same. It's just whether or not that gain is going to receive ordinary tax treatment or preferred tax treatment. So the method for computing recapture or recharacterization depends on the type of asset. Remember, we're focusing in on 1231 assets, business assets that have been held for more than 1 year. After we know that they're 1231 assets, we would classify them as pure 1231, which is land. Land's not depreciated, so we don't have this issue with recapture for land. Land is just a pure 1231 asset. We can have a 1245 asset, which is personal property and intangibles, or a 1250 asset, which is depreciable real property. All three of these are considered 1231 assets, but there are three different types. The first one that we're going to talk about is 1245 depreciation recapture for those 1245 assets. So again, just as the table says, the Section 1245 property is tangible personal property or amortizable intangible property. The rule, and I'm going to highlight this in red, the rule for 1245 assets are that taxpayers must recapture all of the gain to the extent of depreciation taken on the asset. Okay? And when we recapture, the recaptured amount is treated as ordinary income. So what I want us to note is these gains that are recaptured, so these gains that are recaptured are no longer considered 1231 gains. They're no longer considered 1231 gains. They're being reclassified as ordinary. Section 1231 gains that are recaptured do not enter the 1231 netting process. So I'm just going to add here, they do not enter the 1231 netting process. And we'll talk more about what that is later. All right, so under 1245, we're going to recapture the lesser of the recognized gain, so what the actual gain is, or the total accumulated depreciation or amortization on the asset. The remainder, so any remaining gain. So if you do that, so any remaining gain after you've done that is still a 1231 gain. So you may have a gain that you're splitting up. Some of it's going to get ordinary treatment. Some of it's going to get Section 1231 treatment. So I want to flip past this image for just a second and work through this Hercules example. So Hercules Engineering purchased a machine, which is 7-year property, 3 years ago for $26,000 and depreciated it using the half-year convention. Accumulated depreciation on the machine is $14,630. We're going to figure out what is the amount and character of the gain or loss if the machine sold for A, $10,000, B, $15,000, and then C, $30,000. All right, so first we'll calculate the adjusted basis. So the adjusted basis is what we paid for the asset, $26,000, minus the accumulated depreciation of $14,630, or $11,370. That's our adjusted basis. So in situation A, we received $10,000 in proceeds. Our basis is $11,370. So we have a $1,370 loss. And when we have a loss, it's considered a 1231 loss. In B, we are selling the asset for $15,000, so our proceeds are $15,000. Our adjusted basis is $11,370. So we have a gain of $36,30. So because this machine, I'm going to switch to a green, sorry. Because this machine is meeting the classification of 1245, it's personal property or intangibles. That's what we're talking about here. We're applying the 1245 rules. And so the 1245 rules say that under Section 1245, taxpayers must recapture or reclassify the lesser of the gain or accumulated depreciation on the asset. So if I come down here and I recapture the lesser of the gain or the depreciation on the asset, I'm going to recapture or reclassify that 3630. So 3630 is recaptured as ordinary income. So that special 1231 asset that we talked about earlier that would get special treatment is not going to get the treatment anymore for the sale, and the gain of 3630 will be considered ordinary. Then we have version C. We sell the asset for $30,000. Our accumulated depreciation is $11,370. We now have a gain of $18,630. Again, we're talking about 1245 property because it is tangible personal property used in a trade or business for more than 1 year. The rules are that you recapture the lesser of the adjusted basis, not the adjusted basis, the accumulated depreciation or the gain. So in this rendition of the problem, I only have to recapture $14,630 and call that ordinary. The rest of the gain, because the gain's over $18,000, will stay as a 1231 gain. So this is a situation where I'm splitting it up. I'm going to have to recapture 14,630 becomes ordinary. The rest of the gain, the $4,000 that's left, stays as a 1231 gain. So if we're thinking about the amount of the gain, I want to make sure that you're recognizing that I am reclassifying the gain or loss potentially, but the gain or the loss is staying the same amount. So in this problem, I have $14,630 of ordinary income now and $4,000 of 1231 gain, but the sum of those is $18,630. So I have changed the character of the gain, but I'm not changing the amount of the gain. And that's a really critical element of this. All right, so then if I come up to this image, this may help you, this may not help you, but if we have the original basis in the asset here, and now we have the adjusted basis at this line. If we sell the asset for something less than the adjusted basis, the loss will be treated as ordinary under 1231. If we are selling the asset for something less than the original basis, then all of the gain will be recaptured because all of the gain exists because we depreciated the asset. If we hadn't depreciated anything, we wouldn't have a gain at all. And then the last scenario is up here in the gray, where this was scenario C. Some of the gain was recaptured as ordinary, but there was still some gain that was due to appreciation, and that was staying as 1231. So that was this scenario C that we saw here. All right, let's move on to this example. So Jean sells the following business-related assets during the year. All have been held for more than 1 year. So we have machine A with a sales price of $150, basis of $175, accumulated depreciation of $75. We have that information for B, C, and D. So assume Jean is a single taxpayer and has an ordinary income tax rate of 32%. What is the amount and character of each gain or loss, and what is the amount of tax that Jean will have to pay as a result of this transaction? So I'm first going to go through and figure out, so I'll have the machine, I'll have the adjusted basis, the gain or the loss, and then the character. And then we'll go through and figure out as a whole how we're doing after we look at each item individually. So for machine A, the cost basis is 75, accumulated depreciation is 75, so our adjusted basis is 175 minus 75, or 100,000. When we compare that to the proceeds or the sales price of 150, we have a gain of 50. So we have a gain of 50. The question is, what is the character of the gain? And so we have 1245 property here. We've held it for more than a year. It's a 1231 asset, but it's a special type called 1245. And we know we might have to recharacterize some of this gain. The rules are you reclassify to the lesser of the accumulated depreciation of 75 or the gain. And so the $50,000 gain will be considered ordinary. So we have to reclassify that. For asset B, from the machine B, our cost basis is 75. Our accumulated depreciation is 25. So our adjusted basis is 50. We sell this asset for $100,000. So we have $100,000 in proceeds minus the adjusted basis gives us a $50,000 gain. The question again is, how much, if any, of the gain needs to be recaptured or reclassified? And so we would say, my computer is malfunctioning here. Okay. We would say the lesser of accumulated depreciation or the gain. In this example for B, 25,000, the accumulated depreciation has to be considered ordinary. The rest of the gain, the other 25,000, will be staying as a 1231 gain. For C, we have the cost basis of 100,000 minus accumulated depreciation of 35,000. So our basis for the asset, the adjusted basis, is 65. The sales proceeds, we're able to sell this asset for 50. So 50,000 minus 65,000 means we have a loss of $15,000. Remember, for losses, we don't recapture. So all that's going to happen is we're going to keep a $15,000 1231 loss. Then we have asset D. Cost basis 90,000, accumulated depreciation of 25. That's going to give us an adjusted basis of 65. We're selling the asset for 75. So we have 75,000 that we get. Our basis is 65. We have a $10,000 gain. Remember, it's 1245 property. So we look at the lesser of accumulated depreciation or the gain, and that is reclassified or recaptured as ordinary. So all 10,000 is going to be recaptured as ordinary income. So now to just kind of summarize what we've done. So for machine A, I have ordinary and I have 1231. So from machine A, all 50,000 was considered ordinary. So I'm just going to say 50,000. For B, I had 25,000 that had to be recaptured as ordinary, and I had 25,000 that was going to remain as a 1231 gain. For C, I had a loss. So losses don't get recaptured. That loss goes straight over here to the 1231 loss column. For D, I had to recapture all 10,000 of my gain as ordinary. So this is what happened with the sale of these assets. And if I total, I get 85,000 as ordinary income. I net together my $25,000 1231 gain and my $15,000 1231 loss, and I get a $10,000 net 1231 gain. So in the problem, it tells us that the marginal tax rate for this taxpayer is 32% for ordinary income. So $27,200 is the tax due on the ordinary piece. and then my preferred item is going to get 15% treatment for that preferred item. So I have $1,500 in tax due on the 1231 gain. And when I add those together, the total tax due is $28,700 total tax due. So you can see with our 1245 assets, we're talking about tangible personal property. Let me come all the way back up here. We're talking about tangible personal property and amortizable intangible property. The rule that we're applying is that you must recapture the lesser of the recognized gain or accumulated depreciation or amortization. And when we say recapture, what we mean is reclassify as ordinary. If we have a $10,000 gain, we're still going to have a $10,000 gain at the end, but some of it may be reclassified as ordinary and get the ordinary tax rate treatment. Some of it may survive and still get preferred tax treatment. So we saw all three scenarios of that in this problem. We had a loss that just stayed a 1231 loss. Losses don't get recaptured. We had a gain that was less than the accumulated depreciation, so all of the gain was recaptured as ordinary. And then we had a situation where we had a larger gain, and the amount up to the amount of accumulated depreciation was recaptured, but some of the gain continued on and remained 1231 gain. All right, in this problem we saw similar scenarios, and then at the end we went through and said, calculate all of the ordinary income and tax it at the ordinary rate. Net together those 1231 gains and losses, and if you end up with a net gain, tax it at the preferred rate.